This presentation provides an overview of the Victorian Auditor-General's report, High Value, High Risk 2016-17, Delivering HVHR Projects. Victoria's total estimated investment, TEI, in new and existing capital projects in the 2016-17 budget papers is $57.7 billion. In June 2016, the TEI of High Value, High Risk HVHR projects was around $40 billion. A project is classified as HVHR if its TEI is greater than $100 million and funded through the budget process, if it is identified as high risk through a risk assessment process, or if the government feels the project warrants extra rigour. The government introduced the HVHR process in 2010 to address systemic weaknesses that undermine agencies' investment in development of major projects. This is our third audit on the HVHR process. In June 2014, we tabled our first audit report in this series, Impact of Increased Scrutiny of High Value, High Risk Projects. In August 2015, we tabled our second report, Applying the High Value, High Risk process to Unsolicited Proposals. In this audit, we focused on the HVHR process during Stage 4 of the Investment Lifecycle Framework, known as Implement or Deliver the Solution. This stage requires decision makers to understand whether the solution is the best value for money option and to be sure that it can be delivered as planned, its deliverability. We examined whether the HVHR process has been effectively updated and applied to provide sufficient and reliable assurance about the deliverability of HVHR projects. To test the effectiveness of the HVHR process during project delivery, we selected 5 HVHR projects. We looked at the Department of Treasury and Finance, DTF, the Department of Economic Development, Jobs, Transport and Resources, DEGITA, the Department of Health and Human Services, Public Transport Victoria, Vic Roads, Monash Health, the Royal Victorian Eye and Ear Hospital, and the Royal Children's Hospital, Melbourne. DTF and DEGITA have commenced actions to address all of the recommendations from our 2014 and 2015 HVHR audit reports. 9 of the 12 management actions from the 2014 audit have been completed, and 4 of the 6 management actions of the 2015 audit have been completed. DTF has sufficient information to identify and monitor the known risks to the deliverability of HVHR projects, and it advises the Treasurer in a timely manner about significant risks and possible remedial actions. However, DTF relies on timely and accurate reporting by agencies, particularly when it is not represented on project-level steering committees. One of the risks with major transport infrastructure projects is that they may rely on the delivery of other infrastructure projects to fully realise their benefits. Insufficient consideration and monitoring by DTF and responsible agencies of interdependent investment risks was particularly evident for HVHR projects in the transport sector. Some projects have been fast-tracked through the HVHR process without a full business case. Fast-tracking a project means that its strategic merit cannot be fully assessed, and this puts the effectiveness of the state's overarching investment lifecycle framework at risk. We made 3 recommendations in this report directed to DTF. The recommendations focus on strengthening agency risk reporting requirements, establishing clear guidance for DTF's participation in project-level committees, and improving the monitoring of interdependent project risks. For further information, please see the full report of this audit on our website, www.audit.vic.gov.au.